Are you self-employed and wondering if securing a mortgage is within your reach? You're not alone. Many face the same question. The good news, it's absolutely possible. The process may look just a little bit different, but with the right steps, you can make it happen. So stick around as we share the key insights every self-employed borrower needs to know to unlock the door to homeownership. Hi, I'm Joe Harris. I'm here with Lindsay Clark from our marketing team. Lindsay, how you doing today?
Doing great. How are you, Joe?
I'm good. This is a topic that it comes up for all the years I've been a loan officer. It's come up over and over again.
I love this topic.
It's like, I'm self-employed. Can I get a loan?
Well, can you?
That's a great question. Being self-employed by itself does not preclude someone from getting a loan. Okay.
Well, what are some of the biggest misconceptions that people have about getting a mortgage when they're self-employed?
So a couple things I hear is, I can't get a loan, I'm self-employed. And I've heard that so many times. I'm like, why would you say that, right? Yeah. So when you qualify for a mortgage, you qualify based on your income, your assets, your credit, and the property. So there's nothing that says that if you're self-employed, you can't get a loan. Now, where the misconception comes in is that they believe that they don't have enough income to qualify. Okay. Because on one hand, business owners want to make sure that they do their taxes correctly to take advantage of all the tax benefits and not all, there's tax benefits of being self-employed,
sure.
Right? And I shouldn't say it's really a benefit. It's you're reducing your taxes or doing your taxes based on bringing up all the necessary expenses within your business and documenting those properly. Obviously, make sure you have a great tax consultant. We're not giving tax advice here. We're just doing mortgages.
Find a good CPA.
Get a good CPA. But you have to be able to prove, to us that you can qualify based on your income, but you want to take all the tax advantages that the code will allow you to take.
Sure. And
so sometimes the who falls in the middle there, might not work out for some because they might write off everything and then some, right? But you want to do whatever is right for you and your taxes. But if you're trying to qualify for a mortgage, you have to make sure that there's income left after the write-offs. Now, there are some things we can add back in, but we'll get into that.
Sure. Question for you. What are some of the differences between getting a mortgage when you're self-employed versus actually being a salaried employee or working for somebody else?
Well, when you're salaried, you're a W-2 employee. We usually collect your pay stubs, your W-2s, sometimes your tax returns, right? But between the pay stubs, we do a verification of employment. And if you've been there, for a while or not, and you can prove your income through pay stubs, that's it. Your income's on that pay stub, right? For the most part. Now, self-employed is a little bit more challenging.
Somebody else is vouching for the fact that that's what you make, right?
And that same person, filed with the IRS, and then there's a W-2 form that's been, so that's what you're paying taxes on, basically.
Right.
So it doesn't really make a lot of sense for an employer to falsify those documents. But I guess it's possible, but that's not what we're here to talk about, fraud. That's a whole different podcast.
Yeah.
But on self-employed people, you're going to collect your tax return. And because the business, we're going to look at the business tax returns. We're going to look at all of your tax return schedules that have to do with your business, W-2s, 1099s, whatever type of income you get based on being self-employed or however your business is structured, we're going to look at all the necessary documentation for that.
Well, that actually kind of led to my next question, which was what documentation do lenders typically ask for from self-employed individuals when they're applying for a mortgage, and how does it differentiate from what you'd ask for somebody that's a W-2 employee?
Okay, we kind of went over that. If you're W-2'd, it's pay stubs. 30 days worth of pay stubs.
Okay. If
you get paid every 2 weeks, it might be 2 or sometimes 3 pay stubs. If you get paid monthly, like for 1 month or 30 days worth, it's 1 pay stub. If it's in your W-2, if you're W-2'd, obviously if you work for someone and you're not self-employed, you're probably going to be W-2'd.
Right.
So we're going to collect your W-2, and typically we just verify tax returns, but we don't always need them for people that are W-2'd. But if you're self-employed, we're going to need all your tax returns, all the schedules, all your 1099s, W-2s if you pay yourself W-2 in addition to your self-employed income.
Right.
We're going to want to look at your K-1s if it's depending on the corporation type or the setup type. And we're going to take a look at everything to verify that there's enough income there to support the loan.
That's an interesting point that you bring up based off of how you're incorporated. If you're an S Corp, a C Corp, that determines if you need more documentation, right?
Right. Okay. And it depends. Some people have I mean, I've seen tax return mounds and if you're listening on the podcast, I'm holding up my hands with a very, very, very large sandwich. Okay. This thing is huge, but it's a lot. It could be a lot of paperwork. It could be a lot of documentation that you have to provide. And sometimes we have to get, profit and loss statements for the business. Sometimes we need to get letters from accountants. It just depends on the complexity. And I've always told people, the more well put together you are and the more assets and businesses you own, the more documentation it's going to take for a loan. And, I remember being a loan officer way back in the day, and this person had millions of dollars in the bank, lots of businesses. And I'm like, sir, I really want to do your loan. However, we might get through and go down the road. I might frustrate you with the amount of paperwork it's going to require because you have 25 businesses. Yeah. And it's going to be mounds of paperwork. And, it's adverse to logic because these individuals, they're very well put together like that. They might be thinking, wow, this should be easy. Right? Nothing's easy.
So in other words, you're saying I'm definitely going to frustrate you. With
and I'm like, if you want to pay cash, I just go ahead and do it now.
Just go ahead and do that.
But if you want a mortgage, everything looks good. I just might frustrate you with the amount of paperwork I might ask for. Yeah. And look, over the years, we've slimmed that down, but we still need certain things that we just can't get away from, especially for self-employed borrowers.
Sure. Well, what can a self-employed person do to boost or help improve their chances of getting a mortgage?
This question, people might say, well, I'm self-employed, so I probably can't get a loan. Yeah. And, if you're on the marginal fringes of making money yourself, then, you might not be able to get a loan. But there's a lot of write-offs that can be written back on. Amortization, depreciation, depletion, things like this can typically be added back into the loan for qualifying purposes. And there's some other things that we look at, too. But if you're self-employed and you're out there thinking, I don't know if I can get a loan or not, just give it a shot. Yeah. Talk to a seasoned pro or a company that's used to helping self-employed people out, and to see if they can help you. If they can't, they can't. But if they can, great. Yeah. But being self-employed in and of itself does not preclude you from getting a loan.
Yeah. So moral of the story is you can just have a conversation.
It is possible.
Yes.
And, we've seen borrowers that have come from other lenders saying, they couldn't get me a loan. And I'm like, how? There's enough income here to qualify. Your K-1 support it and all these things. It just, there's some people that just don't know what they're doing, or they don't want to take their time to figure it out. Yeah. And, in the past, we've made some mistakes. But we learn from those mistakes over time that we don't make those mistakes again.
Experience helps you.
It's the more data points you have, the more points of reference you have, the better off you're going to be, as long as you've learned from those points of reference. So. Yeah.
Well, that's all I had for you today.
Cool. Well, thanks for joining us today. If you do have if you do want someone to look at your loan, if you're self-employed, give us a call. We'd love to help you. There's some contact information down below. And, they're like the kids say, please share, and subscribe. And if you listened this far, gosh, if you're not a subscriber, just hit the subscribe button right now. Share, do all these things, and we'll see you next time. Thanks.